Okay, folks, looks like we're live. If I can get a sound check here, just so make sure everybody's hearing me. Awesome, guys. Yeah, you're gonna need a beer for this show, huh? We'll pop one. Just anyway, it's actually iced tea. Uh, Crazy day. I've been talking about quite a bit of things over this week. On Sunday night, I started alert. I saw that this wave three was trying to end, and this thing's just been coming apart over the last couple of days. And listen, you guys need to understand something. This stuff is my life. This is what I do. Uh, my wife looked at me. I went to bed at 3 a.m. local time, and was up early this morning. So I'll catch up on my rest. People ask when I sleep. I always say it's on Sunday. But anyway, what we're seeing here is the way this market works anymore is uh, just to kind of refresh something. I told you guys that there was a target of 31.93 to 32.20, and the next day the market explodes 80 handles and it goes right to that number. You guys are going to see, I'm going to talk about these numbers and they're just going to happen. I don't know why. I have a long history of, I've been an analyst at major firms. I've been on squawk boxes in the old days with actually, with 4,000 guys listening to me, our brokers and our reps trying to talk to people and talk them through situations. And what, this is what I do. I love this stuff. We're involved in managing billions of dollars. So this is serious stuff. So I know, I see a couple folks that I know that are institutional customers of ours. So let's get to it and start talking about what's going on here. I just wanted to get the room filled up a little bit more. So we're about 175 right now. So big day, no doubt. I'm going to try to clean up some of this stuff and so you can see what's going on. But another gap. One of the things I was talking to a buddy of mine, I said, these charts anymore have more holes in them than Swiss cheese. I mean, it's unbelievable all the gaps that are all over these charts right now. So the environment that's being created is entirely, this is like nothing like I've ever seen. I started trading these markets in 1979 on Chicago Board of Trade, and I've seen a lot of shit, and I'm telling you, there ain't nothing like this. But yeah, the whole thing. I don't know. Jay's working on a project. I don't think we're going to have anybody else but me on here. So you guys are going to have to just kind of deal with me trying to deal with the line. And I will get this as many questions as I can. But I'm going to just cover a few things. What we're done. We went back to the 200-day moving average faster than we got there. It took us about 8 days to get up to where we were, and 1 day to get back. And I mentioned in the commentary last night that this is exactly how these markets work, and they grind up and they go down quickly, and they go down quickly on air. And I have just a slightly different view of the world when people talk about volume. When I see low volume, just want to look at volume right now. Yeah, we're cranking volume pretty good here. We got an hour and 10 minutes to go. So we're probably gonna print here another maybe 8, 9 billion shares today. So this is pretty high. And I talked about, I think, 2 or 3 videos ago that we're getting this volume, kind of a spike in volume. And when I see spikes in volume, to me, those are climactic. Those are the end of situations, not the beginning of something better. Most people say, well, if the market's up on big volume, that's good. I don't think so. I think those are, depending on the position in the market, those are usually capitulation trades, not the beginning. That's not good. I like markets that will grind up on low volume. They go up a little bit every day. They'll go up forever. When you get to big volume, that starts to tell you that there's something else going on. There's capitulation. People are panicked. Maybe it's shorts. What all the stuff. We live those folks that work around me. I'm always talking about. We live in a world of big numbers, and the numbers. When I started in the market, a big day was 40 million shares. That's right, million shares. That's a nanosecond on the opening today. And, everything has evolved. I've watched this thing evolved over the years. And now what we're seeing here, okay, good. I see Jay showed up. Thanks, Jay. Um, but yeah, so anyway, when we see this kind of volume, let me just bring that chart up. You start to see I'll draw in some stuff here because I think this is part of the importance of understanding what's going on. Then we'll get into target prices and what's likely to happen here in just a minute. So bear with me while I kind of get my legs under me and start to get more involved with what's going on here. But let's take a look at this. This is where I'm talking about here. I can only draw straight lines with this thing. But these are areas that I look at that are really important to understand. You've got this volume spike. I'm going to put another chart together so we can see this all together. But this was right at the lows. You saw the volume, they get this bell-shaped volume where it starts to get really high. Well, we're starting to form another one over here. And this area is most likely going to represent the top or the massive distribution of prices that were happening up there. Now there's just I keep telling you guys we cover the S&P and we talk about stuff. Yesterday's live stream we actually did a lot of individual stocks. So the market isn't the S&P 500; it's individual stocks, and there's a lot of stuff going on. Those of you, I know there's literally thousands of you that have signed up for our email service. We're about to put something out. We've been busting our ass to get this out. So, and here in a little bit, once we get material stuff, I'll tell you about what we've been working on and the next, it's ready to go. So I'm going to make an announcement on this as well, but we're going to stick to the markets for right now. So hang around for a little bit. So these volume spike areas are most likely capitulation. They're things that are telling us something bigger about the markets. Now in last night's video, I talked about the ABC pattern on the weekly. We're going to take a look at it. And this type of reaction, depending on what happens tomorrow, the close on Friday is always really important. A lot of our intermediate work happens on Friday's close, and then we get results or signals or changes in our portfolios that we run. We run 10,000 unique portfolios every day, folks. This is what's going on. I'm talking on the YouTube, talking about the S&P, but our models are running 10,000 unique portfolios for investment advisors. Okay, and so what we see is on Friday's pricing has everything to do with the week and the intermediate. So we use that pricing point. So tomorrow's going to be extremely positive, extremely important. And so what we're going to see most likely, unless we rebound substantially, we're going to continue to see the database on an intermediate basis just stay really neutral. But this volume area has been telling me, I think I did a video one day, said, the increase in volume is telling us that, we're approaching the end. Our short-term database is 90% long. We own 9 out of 10 stocks. There's nowhere to go. This thing's got to liquidate. And I can tell you, tomorrow there is going to be anywhere from 1 to 3,000 sell signals, maybe more, on the short-term database. And we'll take a look at that in a minute. Let's go over and let's take a look at. Let's go over to S&P. Let's talk about some target prices. Let's talk about what's important at the moment before the close here. So here we are we're seeing the rollover on these PPMs. I talked about this in last night's video. Now you're seeing it much more dramatic. We're about on PPM 3 down at the bottom here. We're about to roll over and see this thing penetrate through its second derivative. These are not positive signs. So what it's telling us, I've been talking about this week a minor 3 top, which would tell us that we would, and the target zone, if you recall, was 30.60 to 30.20, roughly. I'm rounding numbers off. Well, we're there. We're actually right at those numbers right now. So we went from looking wonderful yesterday afternoon. We printed, 32.23 on the high yesterday. Our highest that we got to is 32.20. I get these numbers right. 32.32 was the high a few days ago. And so now what we've seen is this sharp retracement, and these kind of breaks are significant. If you went back and watched my video on the 24th of March, it was the day that after we had that 11% rally off the low, I said that was the price low in this market. And the trends were still down, and we saw the markets rebound back into the trends, and that was what happened. So when you see certain types of activity in the market, they deserve credibility. They deserve to pay attention. And this type of move, unless this thing turns around and Chairman Powell shows up and he tells us he's buying everything on the planet and they're buying ETFs, that's about the only thing that's going to save this thing right now. Yesterday's message by the Fed was the most lame thing ever. I talked about something the Fed has been using the last 2 meetings. They've been using this term forcefully, proactively, and aggressively. They're going to use their strategies. And he keeps emphasizing that, and because he wants you to know he's going to be aggressive. They're going to save you. And then the other, I mentioned this in a video last night, he keeps saying they're exercising their lending powers, not spending powers, because they're trying to avoid the moral hazard that they're really creating right now, and creating this fiat currency and everything else. It still amazes me, and we'll talk about gold in a minute, that gold isn't through the roof. Gold should be $3,000 an ounce probably, but it's not. But anyway, what we're looking at here is this 200-day moving average. Let me put some a price window up there. $200-day moving average right now is 29.93 on the futures. So we're still a little bit above it, but this rollover of PPM1 is now negative. PPM2 is still positive, and the cyan line here, 30.22, that is the number you want to watch into the close. I mentioned this last night. There were a couple numbers I mentioned last night, and I saw some comments. And I'm sorry, I finished the video so late last night, I didn't do a lot of the post stuff because I actually edit all the videos and do everything. And I usually put the numbers on the screen on key numbers. I say that I tell you guys. So I apologize for last night because I didn't get a chance to. I was just burned out. It was 1 o'clock in the morning, and, and I had a crazy day yesterday. So, but the bottom line is, we're looking at this 29 number. We're most likely going to see this market hold here. I don't think it's going to collapse, but we're going to go into the weekly chart here in a minute and actually talk about the potential. And I said this in last night's video, where I'm watching the potential of something of a bigger top than what everybody thought. One of my associates we were talking, and he said, "You want to see something funny? Go on to the Robinhood Facebook stream right now, and people are getting murdered over there," is what he was saying, and had a picture of the Wolf of Wall Street movie with Leo in it, with his hands out, going, "I'm not selling." So unfortunately, because of Bitcoin and everything, a lot of people think you can hodl. Some guy goes, "Hey, just know, guys, it'll go back up eventually." So maybe it will, but what we're doing here is really trying to manage these little micros. Our models are still long in this thing. We could get a sell actually today. I don't think we will. I think we'll see some support here at these numbers. The 21 period moving average, 30.22. You can see it on the screen in the box here. And then you got the 200-day below here. We're most likely going to hold. We'll see a bounce from here, but it's not there. And I just see, hey Jake, glad you were able to join. Anyway, yeah, somebody said something about the volume. Man, I have cranked this thing all the way up. I am doing my best here. It's showing on my. Let me crank it just a little bit more. I apologize, man. It's weird. I don't know. Maybe we'll blame YouTube because I have the same settings, and sometimes it's amazing. Other times, yeah. So just give me one more sound check, guys. I'm trying to adjust this thing just a little bit more. I have got this puppy cranked up because I go through a mixer. So let me know if that's a little bit better. On my screen here, it's almost clipping. Okay. God, don't call me Jeffrey Epstein. If I could only tell you this. Anyway. Anyway, so, okay, back to it. These numbers should hold. Doesn't mean they will hold, okay? It's a very passive term, but let's break this down a little bit, and let's go from, before we go to the weekly graph, let's move this over, and I usually don't go into this realm, but let's go over to a 60-minute chart, and let's just see what kind of numbers. Now these indicators, the market grid, range finder, we got different names for it. This thing looks like it's doing one of these classic where volatility is starting to flatten out. You'll notice that the two last couple bars, we're seeing it flatten. And that's typically where this thing is going to start to stabilize here. So we're going to stay online long enough that we can see this. If we go down to a 5-minute graph just to take a look at a really short-term view, we should see something here that will be interesting, hopefully. Yeah, so not that much. But this is kind of interesting. So I have the Fibonacci projections here on a 5-minute graph. It's projecting for prices. Let me move this up, you'll see low target 29.85, 29.63, 29.40. Usually when you start to get these big downside objectives like this, we're pretty close. I think the hourly graph is going to be the place where we're going to be able to see what's going on here. Okay? Yeah, Jake, I'll cover silver. No problem, man. Yeah, so that appears to be where the action is anyway in the metals. So let's go looking at the 60-minute. Like I said, we're trading down on the extreme here. So this is the market. Um, I'm trying to work, folks. I'm working on getting on the App Store on TradeStation. So if there's TradeStation users out there, we've got some other stuff. This is trying to get some stuff to you guys so you can make some money. I see a lot of the bogus shit that's on the internet. It's pretty bad, and I'm just trying to trying to do my best to bring in some real world analysis and some classic stuff here. So anyway, the extreme that we're seeing here is 3,003. You see, low is 3,005. So we got down in just on this hourly graph. We're printing down into the extreme for this hour. So we'll have to see if this thing will bounce back in this range. But these flats tell me we're probably pretty close to the end of this. Is this just printed the low at 0575 on the futures, and we're seeing a little five-handle bounce, nothing big here, but we're starting to see some elements, and I would suspect that we could see a bounce back toward the mid-range here of these numbers, maybe back to 18 to 25 from here. We'll see how it acts as we go through this thing. Yeah, so I just see somebody, why restrict yourself to a market bias? I have no bias. Anybody that watches this channel knows I'll flip my position in a heartbeat. What we do here is look at we look at the trends, on short-term, intermediate, longer-term basis, which that's what I'm always covering to keep that perspective. Let's go to the weeklies, because this is where the big story is brewing. So I'm going to get rid of the market grid here. Okay. Yeah, this is actually really interesting, this action today. What we're seeing here is the potential, the low of last week. This is significant. The low of last week is 29.97, and so we have one more trading day this week. If we take out 29.97, the high last week was 3,200, and we're looking at the futures here, right? The high this week was 32.20. If we take out that low, we will have an outside reversal bar at the top of a potential ABC pattern. Let me draw this in. All right, here we go. This is what I've been talking about. We got basically three waves down. We're going to count this on a weekly as an ABC down. Now we've got an A, B, C up, and this is what I was talking about last night. We get a little move down, probably into potentially to the 10-week moving average. Now this thing is jumping at 1.86% per week, so that number is going to be pretty darn close to the 26. I'm sorry, I get this number right. 2960 plus level on Monday. So this is going to be the support. You're also looking at the 1.86 ppm1. I'll draw. Let me point over to the left here. You're looking at that's a strong, really strong support level. It tells us there's only a 10% probability to trade below the value of that 10-period moving average. Right now it's 29.16. I'll look at it in a minute. When I'm in drawing mode, I can't go through the data. So I'll look at it. I'll look at it in a more detailed section here in a few minutes. But this is the other thing that I think is really important to look at. I'm drawing over on the right-hand side on the ppm 2 and 3, these things went right to their second derivative and have turned south in a big way. This was something I was talking about. This was the old highs on ppm 2. I'm just drawing some rough lines in here. And ppm 1, we actually went through. So what that told us, what that's telling us, and this is a WaveTech rule, okay? The WaveTech rule is that when you don't get expansion in all three averages, just the one, that chances are it's a corrective phase. So this tells us on a weekly basis that this is potentially an ABC correction. I'm going to take this stuff off and I'm going to go a little bit more in depth in what's happening. I have no idea, but doing this live stream today, what I'll come up with for tonight's video for the end of the week. But this is significant, so I'm glad that. Anyway, let's go ahead and. But so well, this move down, then we should get a rebound, and then there should be another move down. I suspect this is what I talked about on the video last night. We're going to go to the 200-week moving average. That number's 2682. And we're still working on the futures. It was slightly different because I focused on the cash last night. We'll take a look at the cash, but we're going to focus on the futures for the moment. But somewhere between 2705, 2682 on cash and futures is going to be the potentially downside target. But there's something even bigger happening here. And you know, we've all seen the stories, and all the folks that have been on CNBC and Fox Business and you name your show, and all that have been telling you, you know, don't fade the Fed. The Fed's going to save us. All that stuff, and that, you know, and I went there as well several weeks ago about how detached the reality or the fundamentals were from what the market was doing. I'm okay with that because I'm primarily driven by quantitative and technicals. The fundamentals are a backdrop for me. They mean something. I do something that I talk a lot about is I do reverse fundamentals. So here's what the technicals are telling me. Here's what the quantitative's telling me. What's going to make that happen or what's going to drive it. And I'll try to come up with and look at what's going on in the world and see what might move or confirm those things ultimately. And what we're seeing, and that's the thing we're talking about here, is we haven't had a lot of reality into this situation. And what we have, what we're seeing now is the market's refocusing. And you know, people are talking about another wave of the virus, all that kind of stuff. There's a lot of stuff built into this market on this craziness, and to try to take that information and make sense of it and then decide on a trade is going to be very difficult. The stuff we're talking about here, by utilizing a very quantitative approach, something the indicators you see on the screen, I developed in 1984. Okay, I'm an old dude, been doing this a long time. I figured out something and I never changed it. I just continued to walk it down the road in this work that I've done. This is my life's work that I'm talking about. And it's been validated a million times over the years. And it's led me for the most part, you know, in a really, really good way. I've had a great career, and everything that you guys get to hear now, I've never exposed it to this level, are there. So, but this whole pattern is potentially something bigger. So let's go to that. And I saw Jay posted that I'm in mad scientist mode. I probably am. So, so let's go. Let's. I want to expand this out because I want to get since I'm in this mode here. Let's just really dig into this stuff. Yeah, and people are asking about projections from Raw. I'll get to that here in just a minute. What time is it? We got almost another hour. I'm going to spend time to really unpack this, and so let's take a look again at this pattern, and we're going to talk about someone's going to watch this and say, oh, he said this. No, I'm talking about probabilities and possibilities of what this market could do. So we mapped out this ABC down. We talked about the ABC up. So, and you're going to see, this was the old highs. Now the Nasdaq made a new high. We talked about the Nasdaq in the live stream yesterday. We're not going to go there today. We're going to stick with the S&P at the moment. This is probably the S&P has got a lot of these elements. It's got Apple, it's got all the stuff in there, and they're big components of what's driving the S&P right now. But the pattern that is, like I said, is a move down to this 10-period moving average, a slight bounce, move down to the 200, but this may not be the end, and we may do a full retracement. I'm going to bring up some Fibonacci numbers in a minute. I'm going to draw in the theory where now all of a sudden maybe we're going to do, man, I got to clean this up. Hang on. So we're gonna look at the Fibonacci's between this high and low. I'll bring the actual numbers up, but we're probably going to see, the 50.618, maybe something deeper into this pattern, and then we're gonna get to this. And this is, I'm just randomly drawing lines, but I want you to the point of this, of drawing these lines random here, is I've been talking about this since March, that I didn't think we'd make a new high. We still could, but it's starting to look less likely at the moment. And what we're really looking at here is a very large consolidation, a lot of volatility. There's a lot of things that are going to come in. And yeah, I see a comment here, forget the market without the Fed. The Fed comes in. Well, the Fed's in, and they we'll see what happens here. But but this pattern here, this is more likely what's going to happen. I'm going to get a little more structured instead of random mad scientist mode. Let's look at this from this standpoint. So we get this ABC up. So we're going to get these structures like ABC, whether it stops here at this 200 week line or not, we'll see. But what we should see is a series of my drawing tool stopped. Hang on. We're going to have to redraw this. Okay, so we get the 3 down. We got 3 up. We're going to operate in a series of 3s. Here's another key point. I'll get this number here in a minute. Is the top, if this is supposed to be an impulse wave and this is a big bull market that everybody's talking about, there's something this day right here, this week right here, that high, I'll pull it up in a minute. If the current market trades below that number, that will negate the potential for a bull market. It's going to tell us what I'm drawing on here right now is absolutely the pattern that is going to unfold over time. And the reason for it is that top, if that's the top of a wave 1, then and you can't overlap this. And the other thing that's happened is that if this was a wave 3 in a larger scale, then we're not even close to the end of this thing, and it should not be acting like it is right now, especially if it generates that outside reversal bar I talked about a few minutes ago. Otherwise, if we take, I think it was 92 on the downside, 29.92, we take that out, we close down below 30, 40, 30, 60 on tomorrow, then it's that type of pattern does not unfold in the beginning, what this would be a beginning of a major wave 3 of a bull market. Doesn't happen. And so what most likely is going to happen is what I'm drawing up here is these series of 3s are going to start to unfold. We'll get down, as I was drawing a minute ago, to 200 week. We could bounce from there. We might go through it a little bit. I'm going to bring up the Fibonacci's here in a minute. But what you're going to get here is these three-way patterns, and then they end up to be, from an Elliott viewpoint, they become an ABC, very complex correctional phase. And if that's the case, that doesn't bode well for longer term, because the long term then tells you that there's something else bigger going on even then, and that's ridiculous to even talk about right now, because we can't trade it, and it's basically BS to talk about it, because it's just way too speculative. And you folks should know, the longer, in some ways, the longer term your projections get, the less the accuracy goes down substantially. So I can tell you what's going to happen in the next 3 days, next 3 weeks, maybe in the next 3 months. Beyond that, it becomes ridiculous to say, well, in 2022 it's going to, no, that's called luck. Okay, and I've had those moments. In 2005, I literally had predicted within $3 the high 2 years out. But those are lucky, even though sometimes they work. Everything that I'm telling you now will lead us to that point, and the analysis will be confirming as we go step by step. So one of the hardest things in markets to do is to be patient enough to be able to watch the markets unfold, okay? You got to watch it. When you're looking at a weekly bar, you got to wait a week. You look at a monthly bar, it's a month, okay? Markets unfold in weeks and months, not in days and weeks. So you have to be able to have that perspective of being able to look at all this stuff. But this pattern I'm talking about here, we're going to put Fibonacci numbers up next. I'm going to talk about some potential projections here, and then we'll go to some questions, and we'll just hang out for a little bit and see, see what I can find on the timeline. Let's go to the Fibonacci's here. Let's just look at this whole retracement value, and let's draw these lines on the page. They're kind of light. I'm going to so hopefully you can see these. They're somewhat light, but you can see we traded just above 0.764 on this thing. So now I'm going to redraw the lines I just showed you, but with a perspective of the Fibonacci grid that we just put up. Here we go. So once again, these lines have been very symmetrical throughout for the most part. And there is a number that I haven't discussed. I'm going to draw a straight line. You see these blue dots right here. That number is major pivot number. It's 3,099. That is a huge number on the pivot of this chart. So we closed above it last week. That was really encouraging. Couldn't hold it. Looks like we're probably going to close under it. Who knows? We got another day before we'll find out. But let's draw those same lines I just did. Talk about that same scenario, only using it within the Fibonacci context. So as I said, we should get a move down to that 10-period moving average. Well, look how interesting is this, because the 10-period moving average is sitting there right around at the 0.68 number, which is 2912. So we go down to 2912, probably rally back, and I could break this down. So what you would do looking at this is you take this high here and the low of whatever the sequence ends up to be, whether it's today or on Monday or tomorrow or whenever that low comes in, and then you would look at a retracement value back to that range. My guess is this, we'll call it 3100 number, this 3099 number is going to be the key number to play off of. Okay, so that's, and then the next move down maybe to 50%, which is 2760. And then if we get down to the next line, 2656 will be comparable to the 200-week moving average. This is exactly what I randomly just kind of drew in. And then these series of threes, now it doesn't have to stop here. It could extend down to this next line, which would be the 2499 number. And that would be much more dramatic. Chances are that 200-day moving average, that the numbers I talked about a few minutes ago, I'll just say them again, that 2680, 2705 basis of cash. We're still working on the futures chart here, but this number should be probably rock bottom for this move if it gets extreme. And my expectation is we're pretty close to the bottom here. We're close to this bottom, and we're likely to bounce a little bit. We get. We'll look at some of the bar counts as well here in a minute, just to kind of get a move. A lot of times I talk about 3 3 5s. There's a pattern 3 3 2 5s. You get 3 down, 2 up, 3 down, sometimes 5 down. Those patterns on a day-to-day basis just can't. They're harder to predict and to get to the right numbers. But anyway, we should get this pattern, and everything should happen within this grid. Whatever goes on here, we should see the markets. I'm randomly drawing again. We should see them move just within that grid. And not only is that grid there, we talked about earlier, there's more holes in this market than Swiss cheese. And what I mean by that, there are gaps everywhere. There is a gap down at that 2400 level that hasn't been filled. Maybe we're going to go down to that level. We'll see. For right now, we're looking at probably a very vulnerable short-term trade ready to roll over. We're looking at an intermediate standpoint is not there. And so I'm going to do one more thing before we move on. I'm just going to bring this up on the other screen, and then I will bear with me one second, folks. All right, I'm going to bring in the WaveTech. Oops, good job. Bear with me. I messed that up. All right, try this again. All right, so I'm going to bring up the WaveTech Research tool, and we've got, I want you to look at the database. So 16,650. I want to go over to the daily, and there was virtually no activity. This thing was pegged at 89.9% long. There are 14,000 symbols. Literally after a day like today, I mentioned earlier, and we could see thousands of trades peel off. We've had thousands of you sign up for our email. We've been trying to put some things together. In the next hour, we're going to reveal, you're going to have access, be able to get access to this platform. And it's going to be research only. You're not going to be able to build portfolios at the moment. We have some runtime issues with this. This is our legacy product that we have out there, but you're going to have access to this, and it's going to be very reasonable, because I want this community to be able to utilize the ideas in here. So when you go to daily here, we're going to see thousands of symbols come off. I'm going to go to the home page for a minute. I want to show you something. Like last night, there were only a couple hundred cells on here. But what you can do is you can click on this thing on the home page, and it's going to show you every buy and sell that's going to be issued. And you can also go out and download the report into Excel. So right now there's 10 pages here of items that are out here. This database can get pretty big. The X's mean just what you think it means. We're selling these stocks. The dollar signs are they're being bought. It's interesting. Global long short is getting a buy here. These are all short term, but there are 10 pages of these things, and you can see most of them are sells. There's going to be like I said, there's going to be thousands of these things. There's going to be stocks. There's going to be opportunities to not only take profits on stocks and things that you have, but there's going to be shorting opportunities to come out of this. And we are going to be doing webinars, all kinds of stuff. So I will tell you how to get to this platform here in a minute. But just know this thing is rolling over on a short-term basis. I've been rambling on the channel for days about this. We've been busting ass trying to figure out how to get this platform out to you folks. So let me get that off screen. Yeah. So as we're talking, market's still hanging down around this is interesting. While we were talking and looking at this, we printed 29.95.50 on the futures. So let's get so guess what we did? The low was 29.97. Today's low 29.95. I was just talking about it. It just happened while we were live here, as we've got an outside reversal working now. Okay, so now any close under 30.60 is going to confirm a top of this weekly pattern, and that's going to be at least a minimum of a 3 to 5 week pattern, possibly as much as an 8-week pattern. So this is what we're talking about just happened, and depending on the close tomorrow, and I'll address this in tonight's video, but what we're talking about here is a very significant event. And this is what I started to allude to in last night's video, is that it's possible that this event that's happening is much larger than what we originally thought. I have been promoting this week early on Monday is that we're going to get this minor correction. In real terms, this still is a minor correction until this moment. And now we're starting to see, this is what I was mentioning last night, that possibly by Friday, we'll be able to see more of this pattern to give us a lead in to on Sunday night's video that I can talk about what's going on in these markets on a larger scale. And it's already revealing its hand as we speak. It bounced off of that, but that's okay. We did get to an extreme. I don't have the market grid up here. I think that might have been, let's just put it up real quick. Yeah, it looks like it went right through the extreme. The extreme today was, on this was 30.27, so we already blew through the extreme, and you can see we're trading below this number. And yeah, this is a significant event, to say the least. So I'm glad I decided to do this live show and do this. So let me just see what kind of questions are out there. I think I've blown this out, but if you guys want to sign up for this, there's no trial period. It's not a lot of money. It's not even a bad trade. But if you want to sign up for it, I'm going to put it up here in a second. All you have to do is go to this page here. It's Kendall Reports. Kendall Reports / WaveTech. And that will get you going. I think I can put that in the timeline. So if you're interested, go ahead. We're ready to go live. Just know that we've never handled thousands of customers before at one time. So we're going to do our very best. We'll see what kind of traction we get. It looks like there's a lot of interest. But like I said, there's going to be, this is entering not only into getting access to all these signals and things that I talk about, but also in an insider group with me doing private, closed-in conferences with anybody that's on this platform. So anyway, I'm looking forward to really taking this to another level, folks. This is I'm really excited for me and for you folks to get exposure and start to build in some of this stuff. So anyway, let's go over to and take a look at some of the questions that are coming in. Okay, here we go. All right. Yeah, just a couple things I'm seeing on the timeline most recently. Michael says, I can't see this just being only a correction. It actually is only a correction, only on a much larger scale. The numbers are so big here, from rebounding, 60, 70% off a low. You're going to see it is going to be a correction, but it's going to feel like a crash. So I agree with your assessment that maybe it's not going to feel like a correction, but on a larger scheme of things and looking at the bigger picture that I just talked about, it is going to be a pretty substantial move, no doubt. And so just kind of looking at things. Yeah, let me look at something. Yeah, so maybe the Fed is out there playing some games. I'm looking at the 10-year is down at 6.5. We won't go into that just yet. Maybe before I get done. I don't even know how long we've been running on this thing so far. I think we're almost at an hour, but there is a potential for a gap tomorrow, like I said. But market players are going to be looking to how to position themselves for a long weekend. Things have turned. Things have turned quite a bit. Yeah. So. Yeah, so somebody said that they're not seeing 3007 on futures. I've flipped over to September futures, by the way. So you got to look at September contract. The June contract's starting to get illiquid, and I've already rolled over. So these are the September contracts, and you can see on the screen right now we're trading 29.98, low 95 on this thing. So if we roll this over to June futures, you're probably right if we put that on the screen. So let's see here. I'm just going through some stuff. Let me see something here. I'm going to try to do something here, folks, see if it'll work. Yeah, so I was able to post that link to access for the models on right now. All right, I'm just trying to look through some things here, folks. Bear with me. Yeah, I don't usually look IWM. Somebody had a question on that. Um, we'll bring up IWM. Uh, yeah, huge reversal there. Interesting in that the Russell traded just up to its 200-week moving average, just above it, and we opened higher, and this thing just reversed. And that actually, that's a great question. Thanks for asking that. Yeah, huge reversal. It looks like this thing the same pattern, only worse on the Russell. Let's take a look. I've got the what we want to look at here is this chart very quickly here is we're getting this. This is the IJR, which is similar to the Russell. This is the small cap spiders against the S&P. So you can see we've been trying to get some kind of bottom on this spread, and that was starting to look pretty significant. This is the daily chart. This one here is the monthly, I believe. Let me look at this. Yeah, this is a weekly, and this is the long-term monthly that I had up there. I thought that's what it was. You can see that thing just flat. It's just flattening out. Small caps are still got a lot of problems. So, yep. Okay, so let's take a look at some of the other things on here. Yeah, I've seen a couple comments about the lows in the futures. Just if you didn't hear that, these are September futures. If I go back up here and put in ESM 20, you'll see the low is 302 right now. That those the near futures have rolled over in most platforms. So when I click on up over here on this ES symbol, that's going to bring us to the near futures and the rollover. So I think there's another week left on the. I'm not sure. I think the 18th next week is the actual expiration, but the liquidity's already started rolling over. So that's why you're seeing the September futures on this near futures contract here. Okay. So you guys seeing the screen? I see a comment that the screen's blurry. Is that true? It looks crispy clean on my, I'm using OBS on this thing, so I'm not sure. Just trying to find, oh, I did say I'd go through silver. I promised Jake a while ago, so hopefully he's still hanging out. Let's take a look at silver. Um, it's interesting because everything, trying to think where to start with this. When we get into these liquidation modes, when you see the you start to see Dow Jones down the kind of numbers that we're seeing. You're looking at down 1,800 points right now. Markets just get into liquidation mode. It's like if it's got an uptick, people start selling it to raise capital and these type of things. And that's just when days like this happen. This is just how it goes. Gold has actually still got a bid in it. It's still up $11. But silver, this is the weekly. Let me go over to a daily, and I'm going to remove some of the stuff so we can just see the clean chart here. But it's really been hovering just hovering right above its 200-day moving average. PPMs are failing. PPM2 is still positive, so there's some support into this market, but it's still a little bit vulnerable here to an exit. We had a buy signal on this at 1550. I think, is that right? Yeah, 1550. It's still holding that number, a couple dollar profit, and it may hold this level here, but the bands are telling us the market bands are telling us that we're pretty much locked in this range. And just a quick look at gold. Gold has the same basic pattern. It's got a slight upslope, but it's already flattening out. So volatility is starting to collapse and go down. So questions out there, will tomorrow be up or down? Don't know for sure. I'm not a very good binary trader, but my expectations would be with us trading all the way down to 89 on the near futures now. Maybe we'll even print these numbers I talked about on the ESM 20s. Let's see where they are right now. They are at 98.50, so they printed a new low as well. So, but anyway, yeah, I think these markets are in big trouble. These are not the kind of days that you recover quickly from. I don't know if the Fed is sitting there cranking up. Are they going to start buying stocks? Is that their next game? I hope not. I hope we don't end up, doing that. I saw somebody, matter of fact, I almost posted on Twitter several days ago. I think it was Monday. Somebody made a comment about Kramer. When Kramer's bullish, you want to get out of the market. Absolutely, man. That guy's a weasel. I'm sorry. I hate to call people names on the internet, but man, very annoying. But the point he capitulated. It's going up forever, and you should be. Yeah, we know the story. And I don't think, Michael, I don't think the algos have been completely absent. In fact, I think they've been driving this thing, and we'll bring up another screen I haven't brought up. This actually brings up an interesting conversation. We kind of wind stuff down. Is that this bar? I'm going to make these full screen just so this is all you can see on your screen. Okay, these top bars that are up here. What you're seeing is this is liquidity, and right now there isn't any. This happens on all these declines. Here we just punched new lows out. We went down to 86. The far left, they're just killing this market right now. So we traded down to 85. So there's a bit of a panic selling going on as we're watching here. We're half hour into the close. I don't know, guys. Give me a shout out. You guys want to hang out to the close and watch this thing? I'll do it if you want. And by the way, we got like 600, 800 people on here, man. Smash that like sign. Let's keep this channel growing. I'm very interactive with my community, both my institutional and now my newfound community with a lot of retail folks. So I'm glad to participate, man. This is fun. You guys have to understand, I love this shit. Okay. I walked on the Chicago Board of Trade in 1979 and fell in love. It overwhelmed me. A buddy of mine took me down to the trading floor for the first time, and I was like, I got to be here. There's nowhere else I wanted to be other than there. Someday I'll tell you guys a story about that. But let's see here. Okay. All right. We're hanging out. You guys convinced me. Yeah. Eldon Wong. Yes. WaveTech has every symbol. There's 16,000 SPY, Everything's in there, man. And I'm going to teach you guys how to use this thing. So sign up, because I think it's going to be really awesome dealing with it. It's a research only approach. We've got other stuff we can do with you folks. We're just trying to figure it out. Like I said, this YouTube channel's been around for 2.5 months in real scheme of things. So we're seeing a lot of growth. Make sure you subscribe if you're watching. You haven't watched before. Come on and hang out with us. And there's a lot of content. I put out the daily market numbers, and everything's getting gets blown out on days like this. But there's been some amazing trades this week off the market grid, and I know there's folks on here that have used it, and it's powerful. One of the things that you will never hear from me is the whole hodl. I don't get into opinions. There's a line that you'll see in emails and stuff that you're going to be getting from me is philosophy is process over attitude and opinion. And the tagline with that is attitudes and opinions keep you in when you should be out and out when you should be in. You have to have a process. No one's that smart. A quantitative process will beat a human all the time if it's a good process. And I don't think I have the best process in the world. I just have a very consistent process, and I understand it because this is everything that's in these models, everything that I do, I've been using. I developed in 1984 with an old client and associate of mine, professor, PhD of physics, professor from University of Michigan. And we did some amazing work a long time ago. And he left the work, he went on, I stayed with it, I developed it over the years. I developed trading models on it. I've done everything with those original concepts that Bill and I put together. And, I couldn't tell you what a great collaboration that was. So I have mentored a lot of folks, and that's really what I'm trying to do with a lot of stuff. What I'm doing is I want to truly mentor people and understanding how these market movements move and what's going on. So that is my purpose. It has been my purpose for a very long time. And I've been institutional trader. I've worked in hedge funds. I've traded on the floor for many years. I've done a lot of stuff. And, like I said, when I say I love this stuff, I love this stuff. So, hang out. It'll be good. Let's see here. Yeah, hey Wade, I know. You know what? Listen, I'm going to tell you a very quick story while we're watching this thing trade for a few minutes. I'm kind of let it trade, but my very first experience when I walked down to Chicago Board of Trade, I lost all my money. Jay was a little guy. Jay is my son, and his mom can tell that story a lot better. When I lost all the money on the Board of Trade. And, but what it did was it made me realize what was wrong, and it was emotion. And I had to figure out how to get emotion out. That was in 79. In 1980, I developed my first trading system in 1980, and I made 235% in 1981 off of that trading system. And everybody wanted to be my friend. Okay, I built an entire business off my very first quant model, and it wasn't even calling it a quant model wasn't right. I had an Apple II Plus with VisiCalc, which was a spreadsheet, and I figured out how to get the emotion out of this game because the emotions will kill you, and it's really hard to be disciplined. I can tell you, folks, you come in with us and do the WaveTech tool and stuff. It's hard. I will talk to you a lot on that other side of the spectrum here, outside of the channel, and doing this stuff on discipline and staying and following the models and understanding. And there are times when you have to abort all things when certain circumstances. The things that we've been in for a while has been absolutely No one's ever seen anything like this. No one's ever seen an entire Western civilization, let's just say the whole planet, shut down for any period of time. This whole virus thing, whether it's right, wrong, what the decisions are made, doesn't matter. We're dealing with this, and now we're seeing trillions and trillions of dollars of fiat currency being built, put into the system, a bunch of phony money. Somebody, I saw one of the funniest tweets ever a couple months ago, and somebody said, how does the Fed, where did they get the $5 trillion for? And the guy says, let's see, open up spreadsheet, add zeros, hit save. And that's pretty much it. You know, they're creating this money out of thin air. And that's why when I talked about the statement that Powell keeps making, because he's presenting this sham that these guys are doing. He's saying it's lending powers, not spending powers. He keeps saying that. I just want to slap the guy when I see him say that, right? It's like, come on, you know what you're telling us. You're trying to avoid the whole argument about moral hazard and about what you're really doing to the economy and what really has happened. So I've said this months ago. I'm an American. If they can engineer us out of this thing so we don't end up in a massive depression, I sense that a lot of guys and folks on this timeline right now and watching this are, are younger people. I don't want you guys to go. I have kids. Jay's on here. I've got other children. I don't want to see people live through a damn depression. My mother was a depression baby. You know, I've heard the stories. I've got some crazy stories my mother told me about what happened to her in the early 1930s. She was born in 1927. So she was literally a depression baby. My dad was born in 26. I've heard this stuff. I grew up hearing it, you know. So anyway, enough about babbling. Let's go back to markets. Looks like they're bouncing a little bit here. Yeah, so Jonathan Klein, is Bob saying that the SPY is going to bottom? No, I'm not. I'm saying that it's going to hit a extreme low here. We're going to see a bounce, which will be a retracement rally, which I will cover in the nightly videos. So make sure you folks subscribe, because I do these videos every day. One of my associates said to me earlier that I work harder than most people on YouTube. It takes 3 to 5 hours to do those videos sometimes, depending on what the content is. And, and I just find it, when I'm doing this kind of work, I'm so immersed in the markets. I trade better. Everything works better for me. Everything works better for my clients and the people that I associate with. So I'm actually loving the work, okay, believe it or not. And somebody said, hey, Bob, what happened to your 3,400 target? The 3,400 target is still out there. We have not negated that just yet. This is the beauty of life, is things change. And whatever you thought was going to happen, you have to be flexible. And this goes to the statement that I made, is you have to use process over attitude and opinion. So that was part of the process, and there's some Fibonacci numbers I talked about. And this reversal that has happened has to be respected. Just like I referenced earlier when I was talking that on the 24th, 25th of March, when we had that 11% down up day, that was the day I proclaimed the low in prices had been met. You don't see those kind of reversals and take them lightly. That was the bottom of the price. The trends were still down at that time, and we saw resistance and a lot of crazy volatility after that number was printed, and virtually did the V bottom until today. And maybe the comment is with the Fed is it works until it doesn't, and it appears maybe yesterday, maybe yesterday was just a sign that market participants finally said, "Screw this! This is BS." And yeah, and it's kind of interesting. I saw a comment here, somebody talking about the 1930s retracement. Uh, you know, 1933 was pretty substantial. I actually think I might be able to even bring that up on the screen, but we've got 15 minutes to go. This thing's starting to rally off the lows. We're back up over on the September futures here. We're back up over 3006. We ran, what, 15, 20 handles while I was rambling on about virtually all this stuff. Let's see here. Yeah, so 3,400, is it in play even down at 2,850? Probably not. And that's why, listen, one of the things I think is important to understand here is that my analysis as it goes day to day, the markets tell me what they're doing. I don't tell the markets what they're doing. I don't predict things, okay? We have probabilities. I'm a quant. I have an amazing quant environment, okay? One of our, I'm gonna put something on the screen over here for a minute while we're watching the futures recover. But this here is this is our portfolio expert platform, and this thing, if you're managing portfolios out there and you're listening to this, you want to have this. If you have this is absolutely amazing. So if you can go, this green line is one of the strategies. It's 5 ETFs, and you can manage a lot of money. We manage literally billions of dollars on this platform, and giving investment advisors. So we're looking at all kinds of things right now and addressing this community. And there's just a lot of stuff that's out there that we can go through and take a look at, and kind of start looking at all types of different elements and the world of quant and all kinds of stuff that is possible. And I'm telling you, folks, I started in the markets when there weren't even computers hardly. Apple was the only computer out there that you could buy, and an Apple with a color monitor was $5,000 in 1980. I think they came out in '82 is when they came out with the color monitor. But I had a monochrome. I bought that thing in 1980, and Jay's on the line here. There was a game. It was like this helicopter game. He kept that thing for like 30 years, and that computer continued to run. So Apple deserves what they got and the success that they had. Steve Jobs, that was an amazing little computer box that he built. And I even think that thing was like $1,100 or $1,200 at the time when I bought it. So, but anyway, should we close out short positions before the close? Yeah, that's going to be a tough one. It depends on what they are, actually. If they're just SPY trades. Also depends on how well did you get in on this thing. If you did, a choplifter. Thank Jay. So that's pretty funny. So, but yeah. So what? As far as staying in these shorts, I would say probably yes. I can't imagine. Here's the risk. Let's talk about this on a short-term trade like that. That after the close, the Fed comes up with some BS and jacks this market, and they let everybody, they put the messaging out again, hey, we're saving the world. There's a risk of that. So one of the things that I do in a lot of those situations is taking a partial position, and um, that's I would maybe take half of the trade off, and then figure out where some of the key points are. Use the market grid. In the community section. This is funny. I'll tell you guys a funny story, inside story. As I was like finally getting to bed at 3 a.m. last night, and the synapse fired, I didn't put the market grid up in the community section. So I got out of bed and put it up there. Unbelievable, I forgot that. It's usually part of my routine every night. Last night was kind of a disrupted routine, if you will. So anyway, yeah, that market grid will help you everything. And yeah, thanks. Yeah, you're right. Steve Jobs never did build a portfolio. It was Woz that did it. Yeah, absolutely. But Steve was the master marketer. So yes, you're absolutely right. So yeah, like I said, Johan, I would say, go ahead, and I would just take a partial here. Just unless if we close under 29.90, then it's going to be pretty ugly. We got 12 minutes to go, and this is 29.90 on. Let's go over to the cash markets here real quick. Let me just get over there. So cash, 3,015. It's going to be below that 3,020 on the cash. We spent most of this session talking on the futures and looking at the futures today. Yeah, and somebody said day traders who shorted the open always cover in the last 15 minutes. I agree with that. Sometimes in the last minute, if you're playing that game, that's something you can do. And let's see. I'm just looking at lines. Something big is setting up. What I mapped out earlier in the show. So there'll be a replay of this once this thing is out there. Once we complete this, there will be a replay on the channel. So I don't know when it was when we go on for like an hour and a half like this. I wish there was a way to mark the timeline and really talk about what type of, where things I talked about were at, so you could find them without spending an hour of your time trying to find this stuff. So, yeah, so, yeah, the ABC pattern, I talked about that. The potential is the larger pattern on a weekly, if that's the case, is going to be somewhere between 2720, 2685 would be the bottom of that first three-leg down, and we'd see a rally in between where we are now and before we go down. So we'd probably see the key number on the upside, guys, is going to be 3,100. Okay, I'm pretty convinced of that. Okay, Mikhail. Okay, we'll check into that. There should be, yeah. Do me a favor. Send us an email to info@kendallreport.com. We'll see what's going on. Thanks a lot. I'm terrible with names, so I think I mispronounced your name. But yeah, just send us an email. We'll reach out to you and figure out what's going on. All right, let's go over to the live screen again here. See what kind of action we get in the last 8 minutes. Okay, cool. Um, I've got your name right. That's cool. Lots of selling right now. And yeah, this is the thing. I want you folks to look at this meter that's on the right-hand side where you see the histograms bouncing all around. In the very middle, you see they're very small. That means there is no liquidity around the close bid ask. So you have to go out roughly 5 offers, 5 bids to find any liquidity. So what that in itself sets up a lot of volatility here. And you can see on the left-hand side of this screen, you're going to see the numbers of contracts. And this thing had finally stabilized. Maybe that was another sign that we're about to get into another one of these. But you watch how this thing just jumped like 300, 400 points just now. That's because there's no liquidity. That's the outside bars that stick up the highest. That's where there's some liquidity. And when these market players come in, they'll just push it out to that range. So we just traded up to like 94 from like 90 in 30 seconds. So this is when you get to this kind of illiquidity, it gets really bad. And if we get super illiquid on the close here, what we'll see is a bar that's just floating around back and forth, like one bar in the middle. If we get to that range, this thing's in big trouble. So the close, what we'll see here in about 7 minutes. So let's just focus for a few minutes on what's going on in the screen and talk about exactly what type of things are likely to happen here. So liquidity is pretty minimal right now. And as we come into the last 2 minutes of trade, you're going to see the activity pick up substantially here on this level 2 screen. And you're going to see what this market's made of. And a lot of the institutional players will square positions. The mutual fund guys, if they've got liquidations to square up, they're going to be doing that in the next 5 minutes. You're going to start to see a lot of activity flow into the close of the cash markets and any squaring up that needs to be done. So if you're a mutual fund investor or even ETFs and you've sold ETFs, these guys got to square the books, and it's a pretty amazing operation. And it's not like there's some guy sitting there. It's all algorithm driven. So once we get to this stage, we're going to start to see the activity really increase, and it'll be interesting. I'm not hung out, haven't done one of these closing videos like this for a while. Yeah, somebody's saying, just real quick here. Somebody said, I think the market's down on Joe Biden booking odds, no other explanation. Yeah, these markets are in trouble if Biden gets in, there's no doubt. It's just one of those things. Yeah, and I would agree, Mitch, a down Friday would be very significant. Last 6 have been up days, but if you look at the charts, last 6 weeks have been up weeks all together. Overall, we've been in this uptrend. We've been moving pretty good. Yeah, Jess Yates, when I hear the internet kids saying they're smarter than Buffett, I think the market's going to prove. And actually, I'm not a Buffett fan, so I actually don't think he's that smart. I think there was a time maybe he was smart. Now he's just a pawn for the governments and done a lot of trades he's done. I heard a rumor, I put this out here on the channel a couple times on the live streams, as I have some friends in London, big institutional trader buddies, and they told me that Buffett reached out to Treasury, wanted to get a special bond deal, and to bail out the airlines. And Stephen told him to go pound it. And Warren sold all of his stocks that he had and so that his motivation, he did, if you look back in '08 and 9, he did the Bank of America bonds, Goldman Sachs bonds. They were sweetheart deals with backing, 100% backing and guarantee of the U.S. government. You and I and everyone else we know can make money if we had that kind of backing, you know. So, you know, Buffett's so smart, he hangs out with Tim Cook on the Apple campus for a week, and then he goes out and buys a bunch of Apple stock. It's insider trading, okay? That's what that is. You and I are never going to do that. But anyway, enough about Buffett. So here we're coming into the close. Here we're trading, still hanging around this 94 level on the S&P September futures, and liquidity is about the same. We are in that final 2 minutes, so let's watch this thing pretty close. You'll see the numbers get a little bigger on the left-hand side. Typically, they'll get into the hundreds and even thousands. Not today. And look at this. We're 98 all of a sudden. We just bounced 5 handles on air. There's that one bar in the middle I've been talking about. There's one bar floating in the middle, and that's when you know the liquidity is gone. I just saw a 327 bid, a 327 contract bid. So we're starting to see this stuff come in. We printed 99-ish on the high there. Now we're coming back. You look at the chart, you'll see that in the market grid, there's 2 things on this chart, and this is why I'm trying to get the App Store going. Though all the little fine lines, those are what we call the WaveTech webs, and they're linear regression lines, so they tell us a lot about patterns, market trends, a lot of other elements in there. But you'll notice we traded right up to the top of the market grid, which is the purple lines on there. And there's something else that's happening, man. There's too much going on here. But you'll see trades coming down on the time and sales. It says above ask, below ask. These are trades. These are algorithm trades that are coming in. They're pushing the bid ask. You'll see the red ones will be below the bid, and there's a bunch of below the bids coming in, as we just went from 99 down to 90 here on the prints on the September futures. So this is, they're all of a sudden they're pressing them into the lows, massive selling on the close, and watch how erratic this thing's going to get. It literally froze. That was the close, and you'll see it start up again here in just a second. There's a brief little settlement, and here we go, and we're back on. Yeah, so that was the final settlement ticks right there. Basis the cash, now the futures. Now you can see everything's live again, and yeah, so we printed all the way down to 90. We're back up at 96 already, 97, 98. You know, so here we are at the top end of the bands again. We just went through the extreme on the purple lines. Typically, same thing there. We go through that. We stay above this. Here we are at 3,001. So this is short covering from the futures guys. After the close of cash, everybody's going to square up their positions here. And so this was pretty significant. Based on that last close, even on this is a 1 minute graph that I have up there. Based on that close, what we should see is a little backfilling on this thing. So we printed, let me see what we printed here. I think it was 0175 was a print. So we're still hanging in there. We'll probably see it print back. Here we are. We'll probably go back into mid-range around 98 or so. We'll see how it plays out. There's definitely some short covering going here. Everybody that was short all day has looking to take some profits, and pretty much a comment that somebody made online that a lot of the futures traders are going to cover up here at the pretty much played it out at the close here. Now this is the final squaring up of everything. All right. Yeah. So we'll just talk. Was there a bounce to 3,100, then to 2,700? Yeah. There's a number. I would say this would be my suggestion rather than throwing some random thoughts out on the markets. What I do every night, I spend about probably an hour, hour and a half of study on the markets. I like to actually, when these things close, I like to walk away and clear my head and then come in and look at the futures. And those of you, if you're not following me on Twitter, try to follow me on Twitter. Sometimes I'm more active than other times, just depends on what's going on in the world around me. And anyway, yeah, no, you know, I just felt like today deserved a live stream, and hopefully, I didn't see anyone else. We don't have any other issues with the WaveTech thing. Hopefully that goes smooth. Um, but yeah, so anyway, folks, got a lot of likes. You know, before you leave us, smash it a couple more times, and let's make YouTube know that we exist, so we can continue to build this thing up. And yeah, I agree. Leave it, hammer the like. Absolutely. That's it. You know, I didn't see any super chatter, so you know, at least I can get as a like. They're free. But yeah, so uh, yeah, man. Listen, everybody, thank you so much, man. This has been super fun because this is this has been an interesting couple months, not only from the markets, but this channel starting to get some traction. You know, and if you're not subscribed, subscribe. We've got a lot of cool stuff we're going to be doing. We're still learning how to do this stuff because, like I said, it's been maybe 10 weeks now, maybe. You know, we went from basically 0 to 8,000 subscribers pretty quick, and you know, I think we're going to do a lot of good things for the community and for the folks that are willing to put some time out. And you know, I really do appreciate everything. And, oh, look at that, Alex! Thank you, man. Wow, $10. Thank you, man. I appreciate it. That's cool. So, you know, listen, I would say, you know, hopefully we don't have any issues going on with the WaveTech sign up, but go over there. Let me put that out there one more time, just to make sure you know where it's at. And yeah, there's a URL there to get to the WaveTech tool. Again, I just put it on the timeline. And hopefully, we tested the heck out of that thing, so hopefully it's working okay. And if you have any issues, send us an email to info at Kendall Report. So putting that up on the timeline as well. Hey, Mike, I appreciate that, man. I'm glad that you have no idea how good that stuff makes me feel when I know I've helped, been helping you guys out there. Yeah, there is some instruction. There is 3 basic videos to get going, and then the second we get some reasonable signups, probably early in the week, Monday, Tuesday, we're going to do actually a closed Zoom meeting with everybody that signed up, and we will doing some training, asking questions. You'll be able to interact with us on that stuff. So that'll be No, we're not doing a. Somebody asked, can you try it without paying? No, I just, it's not a big dollar amount. You'll see. You can cancel the thing anytime. You could sign up for. I guess if you wanted to do that, it prorates for the balance. It charges everybody at the beginning of the month, so you can pay right now. It'll prorate the rate to the end of the month, and then you can cancel it. You could sign up and cancel right away if you wanted, and then decide whether you want to come back on. It's up to you. There's, but it's not a tremendous amount of money. It's not even a bad trade, but it's going to help you. I'm going to use my famous line that people around here hear all the time, and I tell this with even our institutional guys. If you use this stuff properly, it's free. It pays for itself. And it doesn't take much. Like those airline trades and everything I put out there on the channel, those were all on there, man. All of that stuff. Everything I'm talking about is in that thing. There's going to be thousands and thousands of sell signals after today. And that's the other thing. Just a quick, while we're still talking about this, is that the servers finish running roughly between 7:30 and 8:30 Eastern time every night. They are end of day processes, so there's no intraday. So they will update every evening for all the trades for the next day. And like I said, once you get on there, we're going to do a bunch of webinars. We're going to ultimately, we'll see how things go. There's a lot of stuff I'd love to teach you guys. This is about my legacy. And my life's work that I'm putting out there. So I'm really enjoying this. You can keep this old man going and excited. I always have had a lot of energy. I'm pretty much the ever ready bunny. My mother was like that when she was 87 years old. She was she never stopped. She was amazing. So I love this stuff, and we're going to do our best to help make everybody a lot of money. The goal is to make money for you guys. And the only way to get it to you, the newsletters are kind of a joke because you have to read them. You have to make discretionary decisions, all that stuff. Everything is going to be there on a very structured environment. And that's exactly what we're talking about. And that's having that structure and that kind of like wrapper around your ideas and stuff will make just amazing stuff. I could hook you guys up with hundreds of people that would tell you that I've changed their life, these investment advisors, because we brought this stuff into their lives, and now we're going to do it on a public level. I started a company back in what was it, 1992. And my son Jay, who's on here, he continues to, he continues to work for me. He worked for me at the first company. It was called Market Mind, and we've been, this has been driving everything I've done forever and ever. I use this logic that you folks are using at major institutions. I consulted 26 of the major banks on the planet. I've worked in hedge funds. I used all this stuff has been part of me since the 1980s, but we put it in logic in around 1991, and everything going forward has been driven by that. So, so there's a lot of stuff. Only U.S. stocks right now. I saw Jay answer somebody. So, but anything's possible, folks. We get a lot of support off of this. I can tell you, I'm going to do something really cool with the retail side and doing some stuff. So, hang around. There'll be a lot of good trades. There'll be plenty of money to be made, and we'll figure out how to do all this together. And I try to be a pretty good player. Now I think we do have some ADRs in there. I see Jay's answering questions for you guys, but right now we don't really do any foreign markets. Uh, I never expected, folks, that I would have an international community, and that's what we have. So there's a lot of possibilities. We'll see where this takes us. You know, I I I would like to do some amazing things. And Jay could tell you, in 1992, my aspiration was to go into the uh, do a retail product, but it was very difficult to get any kind of exposure. And this thing just kind of opened it up. And you know, the WaveTech tool is 18 years old. That motor that runs that thing, but that thing is a monster. We use it for all kinds of quant stuff inside. The product I flashed on the screen, Portfolio Expert, is our next level product, but that product is a primary engine that's going to put out a lot of ideas. Some of the charts and other things on there are old school, but it works and it makes money. And like I said, if we get a lot of support from this, we're going to do something. I've got some pretty cool ideas that I want to do at the next level. Yeah, Mac users, yeah, no problem. It's a web-based, so no problem. On our the Portfolio Expert product actually is a desktop, but we're working on and ultimately getting that onto AWS AppStream, which will make it OS agnostic, so it won't matter there either. But for now, WaveTech is just you need a browser. That's it. You know, there are some issues since we're still talking about this stuff. There are some issues with some of the encrypted. I like to use a Brave browser, but like Epic and Brave and some of these encrypted browsers, you're going to have issues in logging in. So you have to use Chrome. Chrome is probably a preferred browser to use that on. Yeah, Sanjay, do you see an inverse? Yeah, yeah, iPad's fine, Calvin. Yeah, no problem, man. You can run a browser, you can run it. Absolutely. Yeah, Stan. I'll put you out. You can go watch. Go to this place here, and I just put a link up for you, Stan, so it's right there on there. And yeah, what's SDC, Jonathan Klein? What we got there? Smile Direct Club. Interesting. Yeah, no position, downtrend. Yeah, this thing was looking pretty good. I remember on the yesterday, it looked like we were going to hold stuff. Everything is coming apart. This goes to what we were talking about earlier. Yeah, did we cover gold? Yes, we did, Christoph. We did. I wish I was talking about this earlier. I wish I could tell you what time it was. You should be able to kind of click through once we get done talking here. This thing will repost. I think we're almost 2 hours in. So, um, 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 yeah, need a 128K modem. That's funny. You'll laugh at this, Toby. I had my original modem was a 300 baud when I started downloading data for a program. That's funny. Um, did not comment on any inverse ETFs. Those things are going to be kind of dangerous here, like the TQs or something like that. Um, you know, man, I wish I had time to do this every day. Today was important. I know there was a lot of folks. I was getting a lot of emails and stuff from folks, so we had an opportunity to present to a lot of folks. Yeah, so I would tell you folks, please tune in tonight to the normal broadcast. So I will have been with this live cast. I think we're pushing like 5 hours of videos in 2 days. So it's been kind of crazy on everything. But yeah, these markets warrant a lot of work here, and but yeah, so all of the stuff on the WaveTech is going to be pretty much security. There are no futures in there, but you can use SPY and all the symbols. There's a lot of them, and we'll once you get on the other. We'll just say on the other side of the firewall, we start training people how to use it. You'll find out a lot more of the things that you'll be able to do with the product. The videos there's tutorial videos on the site at portfolioexpert.com is where you'll end up after you hit that sales page that I put up there. So it's best to go through that link that I sent to you. But once you get there, you'll see there's some training videos, everything. It tells you where everything's at. And once you sign up for the service, there's a video that tells you some of the last steps. You have to register the software. We operate in a highly encrypted. We have a military grade encryption on all of our software, and so. There's been a fair amount of folks that have tried signing up at VPN Partners, and don't do that. No need to. Go to the kendallreport.com/wavetech and sign up through that place. We're not taking customers, retail customers at all at the VPN Partners, and in fact, the Portfolio Expert chart is where you want to go. Tobias, that's funny. That's hilarious. Yeah, always trying to tie the phone line up with the modem, right? That's funny. Yeah, I did say that. I'm working on what I found out on the TradeStation. There's a question on the TradeStation stuff. I did say I was going to put that out there. Nothing works without the other components. So I have. We started a process to get on the app store on TradeStation. So the TSWs and everything I've got out there and the screens that you're looking at today with all the indicators and everything. Unfortunately, virtually every indicator I use is proprietary, and they've made it pretty secure. One of my IT guys and programmers that I've used for a long time was one of the original programmers on TradeStation when it was Omega Research, and we had a long talk about that the other day, and that's something that's there. Yeah, folks. We're just kind of chatting about if you're interested in the WaveTech tool. I'm going to cover all this stuff. I'm going to cover. Tonight, I'll commit to those folks that are on here. We still have like 500. I will tell you, I will cover gold tonight. I'm disappointed in the action, but I will cover it. And I think I covered it a couple nights ago. Very possible with this dip down to 0.65 on the 10-year. I'm going to look at some of those things. So I'll probably do S&P. This is the end of the week, so I'll look at things. If I can get an early start on tonight, that will be just depending on how early of a start I get, what I'll be able to cover tonight. This is I look at Thursday night's video, which is Friday, and for the weekend as a substantial part of my daily video work that I do. So I'm going to try to get an earlier start today and see how things go. And anyway, folks, it's been awesome. 2 hours. It's been awesome. I really appreciate it. I'll get plenty of rest. And I did give a lot of knowledge out today. Jay pointed out I went in and out of mad scientist mode. There's so much that I can teach you guys. I'm not trying to act like I know everything, but what I know a lot about it. I have had the focus of the type of work that I do, and that's all I've done for a very long time. Actually, the turning point was in 1984, and that was when we did the original work, when we came up with PPMs, when we came up with all that stuff. And it was just like the story, if you were on earlier and heard me talking about my first walking on a CBOT for the first time. It was the same thing when we discovered some of these concepts. And I will be going through some of the concepts in detail on some of the stuff when we start digging into PPMs and understanding angle of attack and probabilities and all this other stuff. And, I believe in the math because the math has proven to me over the years to be good. So it's really good. So anyway, I just want to thank everybody again. Thanks for hanging out. It was fun. I love this shit. I wish I could do this all day. That would be cool. I guess I'd have to get paid a lot more than 429 likes. And I did get a super chat. I don't remember his name again, but thank you again. So, hey, I did make $10 today on this one. So, but listen, this is about building this community. This is about figuring out how to scale and to quantify trading to the point where you can start to understand dealing in probabilities instead of guessing. And flipping coins just is not the way to go. And we'll be talking about a lot of stuff, effectiveness ratings, win-loss ratios, all kinds of percentages, and how to look at a decision process and whether it's worth using or not. We're going to go through a lot of stuff. So I hope you guys can sign up. Once again, I'll put this URL last time, and then I'll sign off here. And we will call it quit. We will call it quits here. Yep, there you go. There's the URL again. So, I got talking here. I should have left the live futures up here, this other screen. Yeah, so they kind of finished them here at 3,000. We're going to open up in a couple minutes again for a brief opening, and then they'll close them, and then we'll restart later. But yeah, so pretty ugly day. Definitely an ugly day, folks. What can you say? Thanks for, anyway, this is really cool. A lot of folks watching. We'll talk to you soon. Tonight's video, my videos usually go up between 10:30 and 1 a.m. every night, Sunday through Thursday, and they are for the next session. So last night's video was for today. Tonight's video will be for Friday's action and some probably leading thoughts into what's likely to happen next week, depending on how we trade. So I try to cover, keep some forward-looking thoughts going forward. So the best way to find out some of the questions that you guys are answering is tune into that video tonight. Markets are closed for now. I know we got 24-hour trading, but we'll get it. Follow me on Twitter. It's Twitter at portfolio expert. So I'm Twitter / Portfolio Expert, and that's expert without an E. That's there's no E in the expert. We took the E out for the X factor. That's my joke about that. But that will get you to my Twitter handle, and I will post in the next few hours. I'll post out the market grid for the futures overnight and over there, and then we'll go from there. And Adam G, hello from Australia. Yeah, make sure you watch if you weren't on, Adam. It seems like maybe we had contact via email a while back. I used to live in Melbourne, so I think it seems like that was you that contacted me some time ago. So anyway, but yeah, this replay will go as soon as I get off, so it'll take a little bit to process, and then it'll be up there for you folks. So thanks again for watching. Appreciate it.